You are already suspectful.
Welcome to another episode of You Already Successful. You, yes you, right now. Today, I'm excited. I have a special guest on. This is one of my mentors. I've known this man for half of my life. He's been dropping jewels on me for a while, financially, but then also just life jewels in general. Financial planner, very extremely successful, and I'm happy to have you on the show. Welcome,
Thank
Mr.
you.
Wilson.
Thank you.
So, before we get into it, because there's a lot that we could talk about that we could get into a lot, but we won't be able to share all of the jewels that you've given me throughout the years, but we can get into some of them. Who is Michael Wilson? I know I normally call you Mr., but I'm just going the respectful route.
That's perfectly fine.
Okay. Who is Michael Wilson?
Well, as it pertains to this particular show, I am Michael Wilson, a financial advisor, financial planner, also a life insurance agent. I am an accredited investment fiduciary. This is important because anytime you are investing, you want your advisor to be a fiduciary because he's then duty bound to work in your best interest. I'm also a certified fund specialist. This means that I'm certified with mutual funds, EFTs, and other investments. I also write annuities for guaranteed lifetime income. I roll a lot of 401ks, 403bs, TSPs, and such. So if a person chooses us to handle their life insurance needs, we work with over 30 different life insurance companies to be able to match you with the best company and product for your specific need.
I'm sorry, I had to drop the bomb because you were a very polished man. I knew about some of those, but that's a lot of different hats that you wear, and all around financial awareness, financial guidance. So that's what's up. So that's some of what we're going to talk about. We were talking a little bit off camera, and I actually thought you were solely like in the life insurance space, which I know you're strong in. And I have life insurance through your company. It makes sense, the financial component outside of life insurance. I do want to dig a little bit deep into life insurance
Sure.
for this episode. And just to, I guess, kick things off, what is life insurance in your words? Like, what's the basic level of life insurance and why is it important?
Well, excuse me. Wow, that's a very good question. Excuse me. Life insurance has a lot of different uses. Life insurance is supposed to, at its best, make things as if the person were still here from a financial standpoint. So if someone depends on someone's income to live and something happens to that person, that income is no longer there. And that's where life insurance comes in. It can even work with businesses, which is called key man life insurance. Key man works where if something happens to the key person, trying to find a replacement in the income loss from that person could be substantial, and the life insurance would make up for that. So life insurance essentially secures your future.
Well, but hold on. So you said that there's a type of life insurance that means that if someone were to pass on the job, then the job actually gets compensated from that?
The company, yes. So, for instance, a doctor's office, if that doctor dies, or let's say that it's a doctor's office with 3 different doctors, and they're dependent on this triangle of income, and one of those doctors pass, then that income is lost. And then in the time that it's going to take to replace that doctor, there's lost revenue. That lost revenue can be covered in key man life insurance. But there are many, many other uses for life insurance as well.
Got it. Yeah. I never heard of that one, so that's interesting. And I want to get into some of them, but like the basic generic one, right? You know, how I think about insurance in general. If we drop the life, then it's like we are required to have an insurance in a lot of different ways, like vehicle, home, and sometimes, you know, some of the hatred about insurance is that I'm paying for it and I didn't get to use it.
Okay.
And I think that, you know, the good thing with life insurance though is like at some point we are all gonna die. So at some point it does become useful, and that's the different thing. It's different, the difference between a car insurance and a life insurance. And I think sometimes we don't think about it that way. We're protecting things and not necessarily putting that protection on our life.
Well, life insurance also has many living benefits. So there's the cash value aspect. If you have a permanent life insurance that builds equity, that equity can surpass what you've invested in the policy, normally between 10 and 15 years. But definitely by 20 years, you would have much more money in the policy than you've invested. Plus, you would have all the other benefits. Life insurance now is called a hybrid policy, with many companies offering long-term care benefits that you have through your life insurance. For example, when it comes to long-term care, let's use homeowners insurance as an example. If your house burns down, your homeowners insurance will replace it. There's a 1 in 3,000 chance your home is going to burn down. But there's a 7 out of 10 chance that at age 65 and above that you will need long-term care protection. You have a $300,000 life insurance policy, and it has that feature built in. You can get up to 2% per month of the death benefit. So 2% of 300,000 is 6,000 a month. So the average cost for long-term care is between $40,000 and $120,000 a year. You don't probably, well, no, I wouldn't want to be in the $40,000 one. Okay, so this becomes very important. Now, if you bought or purchased regular long-term care insurance, it only has one purpose. If you don't need it, it's just money spent. Well, a life insurance, you're definitely going to need that one day, but you also have that coverage. If nothing does happen, you can eventually get all your money back if you no longer need the coverage, or you can build cash value to help you towards your retirement.
Wow, but I mean, I don't want anybody to miss that. So life insurance, I think, is often thought about as like something that gets passed on or that exists after we pass. But you're saying that it could actually be used while you're living.
Absolutely. It also has what they call critical illness rider, where if you are told that you had cancer, heart attack, stroke, organ transplant, you can get up to $20,000 lump sum payment. So it has quite a few living benefits. Also, it's the #1 most economical way to create generational wealth.
Facts. And it's tax-free, right?
And the death benefit is 100% tax-free.
Yeah, I mean, you don't really hear tax-free too much.
That's true.
Nowadays.
That's true.
So, I mean, that's another bonus, right? That it is a check. I mean, you know, I've seen it. It's a clean check. Whatever the coverage is what is received. And the government doesn't necessarily get a hand in that.
Right. Also, it avoids probate. Whereas if something happened to you, this house would pass to your wife. But if something happened to both of you, it doesn't pass to your children. It would eventually end up with your children, but it would have to go through probate.
If it's not a will, yeah.
Well, a will is also probated. A trust can avoid probate in many cases, but a will is also normally probated. But the will ensure that your wishes are met.
Got it. Okay. And then as far as that, right, it gets passed down, the life insurance does, that speaks to like beneficiaries, right?
Yes. So, for instance, you have 2 young children. You have plans that, if they want to go to college, you would like for them to be able to realize that dream. But, if you're not here, then you can't provide that for them as if you were here. So most people don't purchase the amount of life insurance they need. A lot of people think if they have $100,000 worth of life insurance, that's good. But if a person makes $100,000 a year, if something happened to that person in 10 years, that's $1 million. 20 years, that's $2 million if the person does not get an increase in income. So those are the things that people need to think about. When it comes to life insurance, the test is to think about your situation, and if that person were not here tomorrow, would you want life insurance from that person? And I'm not looking at it from a standpoint, you've hit the lottery. Anybody would want it after the fact.
Right.
Okay?
Right.
But when it comes to figuring out, can you fit it in your budget?
Yeah.
You have to determine how important it is. I would tell you that most people will have less problem putting a cable bill in their budget than they would life insurance.
Oh, that one hit hard. It's the truth. I was making a parallel to other insurances that we're required to pay, right? And then it's less valuable than ourselves and our legacy and our family, but yet we're paying for those things out of requirement when this is something that could be a life changer and a generational type of transformation by building into it.
Well, the government is going to, when you have to have car insurance, when you have to have homeowners insurance, it's not the law to protect you. It's the law to protect others. You have homeowners insurance. If you have a mortgage, you're protecting the mortgage company. If somebody comes on your property and gets hurt, you're protecting that person. When it comes to car insurance, it's the same thing. It's only the law to have liability insurance. It's not the law to have full coverage. So you can have liability, but the only person that's protected is the other person, not you. Excuse me.
I never thought about it that way, but that makes sense, right? And that's so life insurance is more of a accountability, right? That someone sees the benefit of it and works it into the budget to benefit themselves and their families, which is some of what I want to highlight too about all of the different types of life insurance. There's different types, and there's term versus perm and those kind of things we want to get into. But the beneficiaries piece, to tie that off, it's important that we have life insurance, but then also that we have beneficiaries assigned to it, and that stays up to date, and they know who they are, right? If everyone's on good terms, because there's some of those stories that come out of it where it's like, oh yeah, you find out that you're a beneficiary, then all of a sudden there's threats on life. But apart from that though, can you speak to the value of beneficiaries and kind of keeping that up to date and knowing who?
Well, the importance of keeping beneficiaries up to date, there are a few reasons. But, I've been doing this for decades now, okay? And I've watched young people like yourself get married, get divorced, and remarry. but they never changed the beneficiary. So even though the first wife, isn't the target for the beneficiary, it goes to the beneficiary.
What?
Yes, and I have dealt with new couples, and that situation did arise, and the wife says, Michael or Mr. Wilson, you knew that he wouldn't have wanted to go to her. I can't make that determination.
And to what you're saying, beneficiaries pays no attention to wills or any of that structure. Beneficiaries is almost like a separate entity where it follows that structure.
That's right. Nothing overrides the beneficiary.
Wow.
Okay. So, but where it happens the most is government, where somebody put a beneficiary on 30 years ago. And when they were making $20,000 a year, and they kept that same beneficiary because they never thought about it through life. And they remarry, have a whole another family. I know a case where a woman, her husband died, and the ex-wife was left $300,000. And this woman was my client. She went to church every week. Matter of fact, had several roles in the church, and she told me she was not going to tell that ex-wife about the $300,000.
You said she had 7 rows?
Several rows.
So she
several rows.
She
in
paid
the
for him because she had $300,000 on her.
Well, no, what I'm saying is she was a good Christian woman.
Yeah, I know. I'm sorry.
Okay.
She's watching. I'm just kidding.
Yeah.
No, that was my joke.
But she could not bring herself to tell the ex-wife about the $300,000. It couldn't go to her. So it's probably to this day, and that was about 10 years ago, it could be still sitting there.
Wow.
Yeah.
Yeah, so update your beneficiaries.
You definitely want to do that.
Yearly, right?
Well,
or at least look at it.
The beneficiaries for most people, once they're set, is fine. Now, if you have a life change, then, a lot of people, though, if they automatically think about that. If they're no longer with that person, they automatically think about that. But some don't. But yeah, it's important to note that whoever the beneficiary is, there's no argument after the fact.
Wow.
There's nothing you can do about it.
And the person is dead. I mean,
yes.
I guess that's the expression about rolling in the grave. That person is probably doing that. But yeah, man, that's important to say. So next point, right? Well, before we even get into any other points, can you speak a little bit about how you got into life insurance? Because we had a side conversation. I didn't know any of that, and it made sense in why you kind of took it so serious and why you take it to heart. Because this isn't just something that you are trying to sell, right? I mean, you fully believe and back it. How did you get into life insurance?
Well, I started in life insurance business when I was 25 years old. My mother died when I was 20 years old and left me zero. My father died when I was 25 years old and left me zero. So one of the reasons was to try to break that cycle. At least that's what I told myself. And I did get in the insurance business when I was 25 years old, and I purchased 1,000 business card boxes. And everybody that I would see, I would hand my business card to. Now, one of the things that did come out of that is I received a lot more calls of people who died without life insurance. They were calling to see if they did purchase life insurance with me than I did people that actually died with life insurance. That's the sad part about it. Young people feel invincible often, and they don't consider life insurance as important enough to make the cost sacrifice. And
so I think, right, when we're picking life insurance and when we're thinking about life insurance, there's different types. They come at different prices, different costs. you mentioned that someone had $100,000 policy, and is life insurance a little bit circumstantial, like based on your circumstances? What can you afford? What do you have in your possession? What's a good amount? How do you diagnose, as a financial planner and life insurance advisor, how do you diagnose someone's situation to find out what a good number is for them?
Well, there are rule of thumbs, and that rule of thumb is 10 to 12 times your annual income. Now, if I did an analysis on people, most people wouldn't purchase the amount that analysis would say. That the analysis would tell you how much you need for your family, for them to survive financially, as if you weren't here, and to reach your goals. Now, to give you another example, if you remember 9/11, well, gosh, I guess it's been like 21 years ago now, but 9/11, when something happens in this country, like a terrorist attack or something of that nature, it becomes the government's responsibility. So the 3,000 or so people that died became the government's responsibility. And they hired someone to determine how much each person should get paid.
Wait, why did they become the government's? Because of the amount of the?
No.
Because of the? What?
As taxpayers in this country, and you being a U.S. citizen, the government is supposed to be for the people, by the people. And the government is responsible for your safety. Just like if you walk into a mall, there's a certain amount of insurance that's there for your safety.
Okay,
if you get killed or shot in a mall and you weren't involved in anything unlawful, that mall is responsible. Okay. So the government is responsible. And the government came up with, if you were single, they paid you 12 times your income. If you had children or you were married, they paid you 20 times your income to every single person who died. Now, most people would gladly accept that they're worth 12 times their income or 20 times their income, or a relative is worth that, by the government. But many won't think they're worth that enough to spend the money to provide that protection for them, for their family themselves.
Yeah, that's deep. One, I didn't know about that. With the government being responsible, but it makes sense to your first point about insurance is meant to protect
the other person.
The other person. So that makes total sense. How many people lose out on tapping in potential insurances in general, right? Not even talking about life insurance now, because they don't know of something. In your realm, have you heard of that before, where it's just like, I mean, I have a neighbor, he's probably gonna watch this, but I won't say his name, he knows who he is, but somebody hit his tree. And he felt sorry for the young kid, and he's like, no, I don't want to do anything with the insurance. I'm like, well, the insurance they cover him, so this is no hit against him. It's just a matter of covering your damage you have. He left it alone. No, I don't want to go after that kid. So in that way, he let the insurance off the hook. Really, right? Because the kid.
Yes, but there is some wisdom in that sometimes. A kid hit my mailbox, a 16-year-old. They were playing and they were throwing things at him as he was pulling off, and he drove looking back and hit my mailbox day before yesterday. And, he just looked like a kid to me. And I told him, don't worry about it. Okay, he pushed, I have rocks there, so that protect the mailbox. He broke the mailbox and pushed one of the rocks about 3 feet into the yard, so it did damage to my lawn. I let him go. Could I report it to the insurance? Well, first of all, I have a $500 deductible. Okay, so it wouldn't have been worth it. But the insurance company, if you have too many claims, they will drop you. So, for instance, if you have the same claim 3 times, I think in 3 years, they can legally drop you. And if they do, all your claims that you gain to go with another company, the increased costs would eat up all of those gains.
Yeah.
So you don't want to involve the insurance company on small claims.
And you're saying if you were to take that out of your claim, right? If apart from his insurance, because you weren't going after him, if you were to file it on your end, then you would be liable for that $500. But let me say this really quick to the camera. Kids, if you hit my mailbox, I'm coming for your insurance. I'm not. I mean, I am of the mindset if you do damage. Now, like in fairness, like you said, that's part halfway a joke, halfway the truth. But I think for the kid that hit the tree, like that was a bad situation, and he was harmed from it. But
the kid or the homeowner?
The kid. Yeah, I mean, it was a couple people in the car as well. And that was a very crazy accident that doesn't normally. So anyway, I mean, I hope that kid is doing well. But I was telling him he didn't go and pursue the insurance, but I was like, well, he has insurance, and that's kind of what protects him. Yeah. And so if he would have pursued his insurance, then his insurance probably would have just cut him a check. And I think sometimes those insurance companies on the other side, right, not ours, they look for those. Someone hit me and ran a red light, and their insurance company was on the phone with me trying to cut me a check quick.
Yeah, before you get a lawyer. Yeah, sure.
Yeah, so.
Yeah, now I don't have to pay a deductible if I sued his insurance company, but.
It depends.
Yeah, God has blessed me to be able to afford to replace that mailbox. Okay, and this kid's 16 years old. He made a mistake. He could probably get in trouble with his parents, and if I went to the insurance company, that would be a ding on him because he hit my mailbox, my mailbox certainly wasn't in the street, and I just felt like I would give him a pass on it. My mailbox now is sitting on the ground, and the mail person has to put the mail in the box sitting on the ground.
Have you ever thought about getting involved in the stock market? Like you hear the market's up, it's down, it's red, it's green, it's bear, it's bull. You don't really know what that means. Or maybe you currently do already invest and you want a deeper understanding. You're just not sure where to start. You need a coach. That's where you should start. You need a coach who is an expert in that field, in that space, and is not an influencer. And there's a big difference there. So you need someone who's experienced, someone who was a broker before, right? Someone who managed branches, right? Someone who will talk to you about risk and reward, not just, dangle some money or some success stories in front of you. To get you to buy into something, but someone that will give you the tools you need to be successful using your funds yourself. I'm talking about Financially Present. You need to check Financially Present out. Head over to the website, www.financiallypresent.com, and there's something for everyone there. So regardless of what level you're on, there's something for you there. There's training, there's curriculums. Follow the YouTube page. There's merch, there's all types of things for purchase. Use my link to get 15% off. Click the link in the bio. So I want to talk about one of the problems that I see in our community. Well, I'll bring it closer into my cultural community, right? Is that a lot of West Indians, Jamaicans, they don't want to even talk about death. Right. So it's almost like if you talk about it, it's just a turn off and a shutdown. So what tends to happen sometimes is that we are faced with the loss of someone. And then we have to be also faced with all that comes with that and that responsibility. And then we find out that, oh man, we're going to have a hard time managing this, or we have to take on this debt. when it was an opportunity. So we realized it too late after the accident has already happened. Is that what's the number one reason that you see people stay away from life insurance? Is that one of?
Well, of course, there's the psychological component. I've had many African American men tell me, I don't want to leave that kind of money to her to spend with another man. I've had them say that right in front of their wives. And what I tell them, if you don't leave her any money, she's going to need to run to another man. Not only that, okay, my wife is a representation of me. And one of the differences that I have noticed with the races, a white man cares a lot about his legacy. But because we are actual descendants of slaves, we were taught to be against each other. So one of the things that happened during slavery is that we were put in charge of each other. That created an instant problem with relationships. So this person, to be pleasing to the boss, had to be hard on us. And if we told on somebody and we got a half a day off, that was a huge benefit, because the only day the slaves had off was Christmas. So I believe that same thinking permeates the mind today. You know, I made it without it. You know, I did it, you know, so they can do it too. We don't have a generational legacy mindset. You know, that's the problem. And see, most people don't understand how happiness works, how success works, in the frame of mind that they need to be in to accomplish that.
Wow. I mean, you said it. We oftentimes we're almost selfish, right? We want to compile the money our own and disregard what happens after because we're not in it.
Yeah. Now,
like the different mentality is that if I'm not here, I want to set that next generation up.
And see, I want to be clear that this is not all black men.
For sure.
Okay?
For sure.
And I am not a black man basher. I have two sons. We have to first realize that 95% of the people in America control 20% of the wealth, and 5% control 80% of the wealth. So that tells you that there's a lot of competition within the 95%, and there's plenty of room in the 5%. So the thinking of people, one of the things that I do realize that people are contented with lack. People are contented with meager means. And I believe that it's the trick of the devil to focus on lack and be all right and content with lack. We have to remember, if we go back to the beginning, Satan, well, first of all, God gave Adam and Eve everything in the garden, full abundance. It's almost like there's 1,000 homes in this community. God gives you all 1,000 homes except one. You have 1,000 homes. You can 999 of them are yours, but then there's one that's not yours. And I'm able to come along and get you to focus on that one all the way to destruction. Wow. So it's a trick of the devil that we're supposed to live a life of lack. I made it through, so without help, they make it through without help. That is a a mindset of many people, and we have to work to change that mindset.
Facts. I mean, and if we look at it, right, if we flip it around, to your point, life insurance could actually be the vehicle that transforms into abundance. But it takes for a person or a generation to kind of start it. So if we can think about it in reverse, right? If we were to inherit life insurance, if we were to make it on our own without it, how much more would have life insurance have done to start another business or buy another property? That then all of that gets compounded on top of life insurance that then goes to the next generation. So as much as we are interested in abundance, right? I think the stingy part of it is if we're just focused on here and we're missing that bigger opportunity, like you just touched on, to transform.
Well, people somehow have become convinced to work hard and be successful is somehow selfish and lacking piety. But there's nowhere I've read in the Bible that is so. The Bible does say the poor will always be with us, but the Bible points us to help the poor. And we certainly can't help the poor by becoming one of them.
And it doesn't say the poor is us.
That's right. That's right. So that life insurance is the number one way to create generational wealth. If everybody in the family purchased life insurance, even if they pooled the money, I have people that spend $1,000 a month on life insurance on their parents. Now, let me tell you how that works. So you have a person that's 30 years old. You have a person that has a parent that is 60 years old. They take $1,000 and put $1 million of permanent life insurance on that person, or even more. And in 35 years, when that person is ready for retirement, it's likely, from a statistical standpoint, that by age 95, the parent would be gone. There are people that actually do that. Now, that doesn't become their only vehicle because they may live to be 100 or more. But that is not likely, not in today's time anyway. So these are just some of the many uses of life insurance. But life insurance is the least expensive way to pass on a legacy. What about people that are wealthy? Do they need life insurance? I have a client that's wealthy. He spends $8,500 a month on life insurance. That's $102,000 a year.
Yeah, it's like 2 houses.
And I have other clients that has rolled over well over $500,000 into life insurance. And people would say, why? Well, these people have multi-million-dollar estates. And many states still have taxes. Maryland is one of the states that still have an inheritance tax. For example, Virginia does not have an inheritance tax. Inheritance tax, even if it's 10%, and you have $10 million, that's $1 million. Not only that, there is estate taxes. We did enjoy, I think it went up to $5 million for a while with the Republicans in there, but the Democrats just brought it back down. So, life insurance becomes the most economical product to be able to pay those estate taxes and keep all of the money. Elvis Presley paid 50% of his wealth in estate taxes at his death. Wow.
And speaking about the benefits, right? You mentioned cash value earlier. And so there's death benefit, right? And correct me if I'm wrong. So there's death benefit, which is what you've agreed to get, or that your family would get if you were to pass. But then in some cases, right, you can tap into that depending on a certain life circumstance or situation.
That's right.
And then there's a cash value that you could actually use and leverage to buy properties, be your own bank. You know, I hear a lot of
Be your
that.
own banker. There's a concept that's out there that it's a company that markets that concept about using life insurance as your own banker. One of the companies, the main companies I represent, after 5 years, there's zero cost loans on the policy. Excuse me. And with zero cost loans, you get the money at no cost. So if you want to buy a car, you can borrow the money from yourself and pay it back with zero interest if it's after 5 years. Okay? I spoke with someone the other day, 33 years old, and she went through a time and she had $40,000 in credit card debt. And she said on 2 of her credit cards, and this did not total the 40, on 2 of them, the interest alone was $300 each a month. The interest alone.
Wow.
So if you can avoid interest, $600 a month is a decent amount to put away for retirement. Okay?
Wow.
So there's a lot to be said about life insurance, using it to be your own banker, and there's some negativity out there too, but it's all in how it's presented and how you understand it.
And what your situation is probably too.
Yes.
And I heard about, when I was looking it up, I think Disney and McDonald's, they at one point in time used and leveraged their cash value to keep and further their companies. And now, that was an investment that they used their own funds to support, that then grew their wealth substantially. So not only can the life insurance be help grow wealth within the family, but then the things that you can do with it to leverage against it. If I'm not mistaken, banks do that, right? Banks.
Yeah. If you Google, I'm not a sports person, so I don't know who this person is, but if you Google the highest paid college coach in the country, part of his compensation is done through life insurance. During the Depression, in the 1929 Depression that happened in 1929 and all through the 30s, the only place left for many people to get money was through their life insurance. The government actually had to step in and limit how much people could take, of their own money.
What?
That's how, term insurance is a new thing. Term insurance really took hold back in the late 70s with a company called A.L. Williams. A guy by the name of Art Williams developed a concept called buy term and invest the difference. Art is a billionaire today.
If we could, though, spend a second talking about term, because some people might hear term and not know what we're talking about.
Sure.
What's the difference between term? What's the difference between permanent life or whole life? Which is beneficial? Does it matter your situation, your circumstance? What's pros versus cons? What's term life?
It's according to who you ask about as it pertains to beneficial,
Okay.
how beneficial it is. Term insurance, for me, as a financial advisor, financial planner, gives you the largest amount of coverage for the smallest dollar.
Got it.
Now, you're young, you have children, your money is tight, you should get as much term insurance as you can get. Now, I still want to leave a legacy. I still would need or want life insurance for my wife if something happened to me now. So I had at one time $3 million of term insurance, and I've outlived it all.
Wow. And that's like a fortunate thing, because right, you get that because it's like you said, it's more affordable. You get more coverage, but you want to outlive your policy, right? So
It's fortunate to live long,
right?
But I purchased permanent protection, additional coverage. I already had some permanent. March before last for $1,100 a month, and purchased some with my wife for about $700 a month. That's to be able to leave a legacy. If I would have purchased that permanent insurance when I purchased the term insurance, it would have probably been $100 and something instead of $1,100.
Got it.
Okay.
Got it.
So term insurance, the concept of only needing term insurance, I'm a Dave Ramsey Smart Vestor Pro. So people come from the Ramsey Solutions to me every day. I'm a part of that organization. And Ramsey believes in term insurance. I have a picture of him in my office that says buy 10 to 12 times your income in term insurance. I personally don't believe term insurance is for the solution for everybody. It wasn't for me. So now, if you want life insurance until you die, that you want to leave a legacy, you're not just only having it for income replacement, I would recommend permanent life insurance. If you need insurance for 20 years, 30 years max if you're young enough, term insurance will cover that. Your mortgage, that's where it started, to cover a mortgage. So,
got it.
But I'm a firm believer in all types of life insurance, but for the long term, permanent ends up being the topper for me.
Got it. So because term essentially terminates after a certain period of time. So you could have $3 million worth of coverage on year 19 of 20 or 29 of 30. And then on year 31,
it's gone.
It's gone. Along with all of the money, there's no cash value that's left over.
Just like car insurance.
Got it.
Yeah.
But so that is the con, but the pro is that if you're working with a certain amount of money, you can get a lot more coverage. And God forbid something were to happen during that time on year 29, then you get that full $3 million.
But, term insurance is very popular because of the cost. But according to a study done by the University of Pennsylvania, and this also can be Googled, only about 1% of term policies end in a death claim. People either convert it to permanent, lapse, or outlive it, as I did. Consequently, permanent insurance, if you pay for it every month, is guaranteed that that's going to pay because one day you're going to die. So there's a lot of ways to look at it.
Yeah.
The concept that Art Williams had was buy term and invest the difference that you would put in permanent. And to further the concept, one day you'll be self-insured. You'd have enough money to be self-insured. But for most people, that just didn't happen.
Yeah. And there's a mix that you can do too, right? Because that's what I have.
Yes.
So it's essentially balancing what number, because, I think each scenario is different, what your living expenses are, what you're willing to forego to work this in. And then you might say, all right, 30 years term for this amount of coverage, and then whole life for this amount.
Yes.
To then give you a good balance.
Combination, that's right. So you can get the coverage that you need and have some permanent insurance. If a person can afford permanent insurance, if a person wants $500,000 worth of coverage and they can only afford $100,000 of permanent and $400,000 of term, they having some permanent, because you'll never be that young again. 5 years, you're 5 years older. The older you get, the more the life insurance costs. So the younger you can purchase it, the better off you are.
How young is young? Like, how early can you purchase it? I believe when the child is born, right?
15 days old.
15 days old.
You can purchase life insurance at 15 days old.
think we got one for Nora, but I need to talk to you about the second child. But yeah, so and then as that kid grows, a life insurance policy can be turned over, right? To
the kid.
To the kid.
Yeah, once. Matter of fact, it automatically does. Yeah, it automatically does. So,
what age is that?
I think it's 18. It could be different for different states, but I think it's 18.
Well, Nora better stay on my good side because I might have to.
Well, when I say turned over to her, she can call the company and do what she wants.
Okay.
She can change the beneficiary. She becomes the owner at a certain age, and I think it's 18.
I heard, is this true or a myth? I heard that you could take a life insurance policy on someone without their consent.
No.
You cannot.
You cannot.
That's a myth.
That's a myth.
That's a myth. Okay.
Now, if you are in the government, there are companies that write government employees with what's called simplified underwriting.
Okay.
And there's a company, I think, called Globe that worked in the government. The policy is not competitive, but they can add their husband for up to $50,000 or something like that without him needing to sign. But in general, you can't put life insurance on someone without them knowing it. They have to sign. Anybody 15 years old, even if it's your own child, if they're 15, they have to sign.
Oh, okay. Yeah, because I heard something about that, or someone's just like, you hear sometimes, I don't know how true it is, but these insurance companies that could do like no health check, where essentially they're just putting insurance on without a health check, but there's some sort of acknowledgement and signature that happens. I'd assume it sounds like.
Most companies go through. What's happening now is there's a company called MIB, Medical Information Bureau.
Okay.
It works like a credit bureau.
Not Men in Black.
Okay, right. This company, if you ever apply for life insurance anywhere, you're in MIB. Okay. Life insurance or health insurance. When you sign an application for life insurance, there's an automatic national prescription check. They know every prescription that's been prescribed to you anywhere in the country, including Hawaii and Alaska. That's automatic. And now they use a company that does algorithms, that can tell, they know a lot about you. You don't need to take an exam or give blood and urine in many cases because of the algorithm, all the way up to age 60. So
I didn't know that.
Yeah, technology, one day you're going to be able to call and order a pizza and they're going to know what to put on it based on your health record.
Well, they already do that for me, the Domino's up the street.
Oh, okay.
But that's crazy. But it makes sense, right? Because some people would think that, there's no check. But it's like, no, they don't need the information from you.
That's right.
Because they already have what they need.
That's
wow.
It. That's it.
Wow,
exactly
that's crazy.
Right.
Okay, so you talked about putting the benefits of life insurance as a whole, but then getting it early. Because the earlier, the more affordable.
Yes. And the more healthy you are, the
family history.
That's a separate issue.
Okay.
But a young person, when they could best qualify for the best rate, they aren't as interested. But when they get older and they start having some health problems, they become more interested. But it ends up costing a lot more.
That actually happened to me. Same exact thing. So I remember maybe I was 19 and new to healthcare. And that's probably part of the problem is financially, we're not financially set at that time when it's most affordable. So someone came and it felt like she was selling me. It was almost like too salesy. So I thought that this was something that she's trying to sell me on. Come to find out, years later, I'm like, wow, my life insurance could have been hundreds of dollars cheaper earlier on.
Absolutely. Excuse me.
And it really dawned on me after the fact. But then my life circumstances changed as well. and I think you were talking about, it being a separate issue. Most people know, like my mom passed to cancer, and that I believe I came to you after, and that actually.
How long ago did your mother pass?
I think it was 7 years.
Yes, it was after.
Right after.
Yeah, right after.
And that further pulled my rate up higher. On the other hand, my wife, right, who also came at that time, she got
the
a
best
preferred,
rate. Preferred plus.
And then a couple years later, people know as well that she was diagnosed with cancer.
Right. She was the one diagnosed with cancer, but she did receive the coverage while she was young and healthy. So if she were to apply now, there would be a different result. First of all, for her to get even standard coverage, 5 years would have to pass. Okay? And getting preferred or preferred plus would just simply be out the question. In your case, as it was in mine, my mother died when I was 20 years old of several different cancers. And until I outlived my mother's age, I could only get standard life insurance. I couldn't get preferred or preferred plus because of family history. So, that's another thing. If you get the coverage while you're young, before your parents even get sick, then that's another benefit of getting it while you're young.
And you're locked in.
You're locked in. They can't take it from you. So you could save a lifetime of money by getting life insurance while you're young, getting it early.
Wow. So I'm living. We are living proof of that, right? And the earlier, the better.
Yes.
And really, when we work it in, right? What I found, right? When you work it into your budget, just like anything else that we might want, then it just becomes normal.
It becomes normal.
You don't even realize that you're missing the money.
Yeah, there are people that pay up to $400 and some even more a month for cable when they have all these sports packages and so on and so forth, and think nothing of it. But when it comes to life insurance, they don't feel the same. Oh, yeah.
Pension pennies.
Yeah, they don't consider it the same. But, if you look at, we hear about death in the news all the time, and what is it? There's a GoFundMe account because they didn't have the proper life insurance coverage.
So then it's relying on, others to pull it in to take care of that family.
That's right.
When the life insurance essentially is what takes care of all of those things after. And most times, we're leaving, not most times, sometimes what's left is the debt and the baggage. And with life insurance, there's a way out to not only clear that debt, but then also manage and sustain what was built.
Speaking of debt, when it comes to designer clothes, wealthy people, you don't see Bill Gates with a designer suit on with it written up and down his leg.
Never.
These things are for people to look like they are more than what they are. That's it. When you see these stars on the red carpet with these designer clothes on, they didn't pay for it because they know if you see that star in it, it's going to make you want to buy it. We live in an environment of consumerism. Everything is designed to take the money out of our hand.
Now.
Right. I will make one point. If you're working for money and you don't have any money, then you don't need money. You just need vouchers. They can just give you a voucher for your rent, a voucher for your car note. You don't need money. So if you're working for money and don't have any money, really think about that. Now, one example, during the government shutdown, we learned that 78% of people in this country live paycheck to paycheck. That wasn't income dependent. In other words, if they made $100,000 a year, or if they made $40,000 a year, they lived paycheck to paycheck. Now, so why is this? It's consumerism. I heard people that made over $100,000 a year saying that, how am I going to pay my bills in 2 weeks? Well, there's a basic rule that you should have heard all your life: save 10% of your income. If you're saving $10,000 a year in 10 years, investing even moderately, you probably have $175,000, $150,000. Invested it aggressively, you could have double that. So people have to realize that it's a mindset.
Yeah.
You know, being broke is a mindset. Being wealthy is a mindset.
Yeah, I heard Andy Stanley say financial margin, right, is where the piece is. Regardless of how much you make, like you said, you can make $10,000 a year, or you can make $1 million a year. But if you have no margin, then essentially that's where the piece is interrupted.
There's no peace. That's right.
But then your hack about how to get to the other side, it starts with the mindset. And you always been big on discipline, and you've kind of always dropped jewels on me about. I think one of the one that you use is you could lack of discipline will make you go enjoy the beach now. Discipline will have you on the beach.
Yes.
Later, or something along that line.
Well, it's actually a quote I took from a motivational speaker named Jim Rohn.
Shout out Jim Rohn.
Yes, Jim Rohn says, the lack of discipline gives immediate gratification. No discipline, just go spend a day at the beach. But with discipline, you can one day own the beach. And that's true. That is true. And see, I am not the most disciplined person.
Me neither.
Certainly, if I were to have more discipline, I could be a lot further in life. But I'm very grateful with where I am. I live where I want, in the type of neighborhood I want, the type of home I want. I'm very grateful for that. Grateful for that. I drive what I want, not what I have to. We can vacation where we want, and we can wear what we want.
Talking.
So, I'm grateful for that. Would I like to be even better off? Yes. But I'm eternally grateful. I'm thankful to God every day, morning, noon, and night, for what He's allowed me to accomplish. I came from zero. I had, by the time I was in 8th grade, we had been set out twice. That means where the people come, take your furniture, and sit it on the street. That's by the time I was in 8th grade. I never had these, when I was a kid, Chuck Taylors for $9.99 were your designer shoes.
Wow.
I wore $1.99 or 99-cent shoes. You go to Safeway and buy them, there would be a basket in the middle of the floor with the shoes. And I have been on the basketball court, turned too quick, and the bottom came right off of them. But, that's what I dealt with.
Yeah.
Kids wore leather coats. I wore corduroy coats. But God has, allowed me to rise above that.
Yeah.
And I'm thankful.
And it's good to, I think for me, my perspective is it's good to have that balance, right? There's always more that we feel we could do, but then if we keep pushing that, then we don't get to take a breath and kind of enjoy the fruits of the labor. So
that's right.
I always look at the balance. It's good to have a plan, right? We don't just want to be spending aimlessly and then not being prepared for future. But then also, I think there's something to say about that gratitude, about gratefulness about where I am, and I can enjoy where I am without being overwhelmed with not wanting more. Content. That's probably the word to capture it. But the hack too, though, about going back to life insurance and amounts, we threw out numbers like 500,000 and 3 million coverage and all of that stuff. That doesn't necessarily have to be that high, depending on the scenario, right? So if someone's making $30,000 a year, right? And they get a $50,000 policy or something like that. That's a more affordable amount, depending on term or life, depending on their situation as well. That could then impact the next generation still. So isn't really just circumstantial, depending on what your situation is?
Well, you're exactly right. I don't have any $50,000 term policies, though. They don't come that low anymore.
Okay.
$100,000 would be the minimum. Even permanent, getting under $100,000 is harder these days. But a 30-year-old, a healthy 30-year-old, could get $1 million for like $30 a month. Yeah, $500,000 for $15, $16 a month. Okay, so if whoever would like to have life insurance could have life insurance. I think anybody who works can afford $15 a month. And, these kids out here are having kids. Mm-hmm. And if they're doing that, they should have life insurance.
But that's important to say, because I think sometimes people get carried away and they hear a number and say, oh my goodness, $3 million, he's a multi-millionaire. What you just said is $1 million, healthier 30-year-old could be $15, $30 a month.
Yes.
So that is the vehicle, right? And that's kind of what we're talking about. To get to $1 million, it may not mean that you have to figure it all out right now, right? And if you invest that in yourself, you might invest it earlier on at a very affordable thing that then transforms the next generation. And if our, family and parents did that as well, then just thinking about that, being paid forward, that $30 a month turned into $1 million for me.
Yeah.
What then I could go on and do with that and recycle the whole process.
Absolutely. I've thought if my parents would have left me $25,000, even if I would have somewhat squandered it or ran through it, it would have taught me to not do it at a younger age. See, my mother died when I was 20. So if she'd have left me $25,000 and I spent it, when my mom died, you could probably start a franchise with $20,000 or $25,000. There's some now that you can start for that. And that's another thing. That's another conversation. But I haven't worked a job or had a boss since I was 27 years old. And I bought my first house when I was 27 years old. So I used the stable income to buy the house before I went into the business I'm in now full time. Otherwise, I would have quit before then. And that also is a mindset when you hear that 80% of people go to a job they don't like. And they say if you work something you do like, you never have work.
Yeah.
You're not working. You're just having a good time. So, everything is mindset. People don't have the right mindset when it comes to life insurance and many other things as well. There might be some other topics I'd like to talk about, things that come to mind now of how to even get in the right frame and using the biblical terms to conclude how to do that. The Bible tells us clearly how to think, okay? And one day I'd like to get into that. But yes, so $15, you get a $500,000 life insurance, you're in.
Wow.
You're told you have health problems down the road, it doesn't matter. It can be converted to permanent insurance without proof of insurability. Your parents are still alive, they didn't die. If your parents died before age 60, is when it affects you. Your parents died before age 60 of cardio or cancer, it's going to affect your life insurance rate. Okay?
And speaking of rate, unlike a cable bill or, internet or whatever, when we sign up on it, the agreement was for $100, I'm getting this thing. You look 3-4 years later, that thing has crept up to $180 a month.
Yes.
Unlike that, life insurance is essentially, here's what you're paying, you locked it in at this early age for $15. When you are 40, for that same amount, you still spend that $15.
That's right. That's exactly right. Yes.
Yeah, that's crazy. So mindset, I'm glad you mentioned that too, because I think that's what it starts with. And hopefully we've changed the mentality and kind of the stigma behind life insurance. Sometimes people say it's not worth it, or it's a gimmick, or it's a scam. It's your money that is then going to safeguard your family, your personal responsibilities, that could really catapult the next generation. And it really does involve a certain level of selflessness, right? Where we're thinking bigger than just us.
Yes.
But there's also caveats and different types of things that you can add, riders, right? Where you could actually take advantage of it. So it's not just, it shouldn't only just be thought about as something that I give away when I go away, but something that we could actually tap into and leverage against to add properties, add value, businesses now, but then also take advantage of benefits if something were to happen that isn't terminal.
Yes. Well, one other point I want to bring up about young people.
Am I still in that category? Do you see?
Well, to me, you are.
All right, cool. All right. We're good.
Yeah. But I'm speaking of even much younger than you.
Okay.
I'm speaking of college kids.
Okay.
Do they need life insurance? I think that something like 98% of college loans that are not that are private loans are co-signed by the parent. Not all loans go away if the student dies. So your parents co-signed for you $80,000 to go to school, $100,000. Grad school can cost $200,000. You need life insurance because if something happens to you, that money is left on your parents. You're not there to work and pay back the loan. So I wanted to make that point as well. Young people think they don't need life insurance. Well, you do.
Wow. Yeah, and see, that's the kind of debt that that example that you talked about, where guy forgot to switch his beneficiaries. He ended up leaving his ex-wife the package. He probably would like to have left the debt, but because he didn't update the beneficiaries. But yeah, whether it's student loans or whether it's homes, right? Because mortgages, right? It could be a lot of wealth accumulated in a generation that, right now I figured it out and I did it. But if it's not protected, if there's not a layer of protection on that, then you might have outstanding mortgages and then it can't be managed or maintained. And then they end up backstepping or backpedaling what was built. So super important tools. I would also throw in like job insurance, right? I think just insurance in general, as you guys hear, is beneficial. Always check and make sure you take advantage of your job insurance too, because a lot of times the company can get that for you at an affordable clip. And I think like for my job, 3 times my salary is something like $12 or something like that.
Yeah,
You disagree
job
with that?
term. No, I don't.
Okay.
Job term is good, but we don't count it in financial planning. Because if somebody offered you $30,000 for a new job, but they didn't have life insurance, you wouldn't say, no, I'm not taking that job because you don't have life insurance. You'd leave that job with the life insurance. So, and, statistically, people change jobs every so often. So in the financial plan, we only count the life insurance you have a contract for. The life insurance on a job, you could get a certificate, but it's a group policy.
Okay. Got it.
But it's still good to have.
Yeah. In addition to something.
Yes.
So just so I'm clear, I'm not saying that, turn to job insurance because, the minute you're no longer with that job, right, and something would happen to you, then you're exposed also. But job insurance is probably something good to tap into in addition to your other whole life term, etc.
Yes.
Cool. Any final thoughts, like, or advice that you would give someone that's right on the edge? And I don't know. I've been hearing about life insurance. I always hear people talking about it. I've been trying to figure out if it's for me. What would you say to that person?
Well, I think that they should realize that if they died and the people that loved them could go back to them and do one more thing after they died, it wouldn't be just to say, I love you again. They would go back and put life insurance on you. Okay? And you have to think about, if something did happen to you, how would your family fare? Okay? And would you be okay with that? You have to take a serious look at it. People look at it as expense, and most people look at it as an expense because they spend all they have. And keep in mind, if you are living off of more than 70% of your take-home pay, you can't save to ever you can't create wealth if you're living off of over 70% of your take-home pay. You have to shoot for eventually to live off of 70%, and I believe in paying 10% in tithes, saving 20%. So think about a couple that's making $150,000 a year or $75,000 each. And if they're saving 20% or $30,000 a year, how many people has $300,000 in the bank in 10 years? That's what they'd have. Now, statistically, you can see from 50-something% all the way up to in the 60% of people in this country cannot afford a $500 emergency. 60% of the people in this country cannot afford a $500 emergency. Wow. And this is the richest country in the world.
Wow.
So if you don't want to pay for life insurance because you don't think you have the money, then you need to follow Dave Ramsey or Susie Orman or somebody, okay, to get your life on track.
Or Michael Wilson. Right.
Or Michael Wilson.
So to tie it off, right? I think we touched on a lot of important topics. I'd say that, right, everyone will die at some point, right? That is the guarantee.
Yes.
And that is the promise and the benefit with life insurance. But just because you die doesn't mean your finances have to, right? There is a way, right, where you maybe in the flesh have died, but your finances are still alive and serve the next generation. So super important, life insurance. Get what's affordable for you. Maybe it's comfortable, right? We talked about how more affordable it is earlier on, but maybe you do what's comfortable now, and now you have some coverage that then you explore, and when you're in another financial space, which is something I need to do, is kind of reapproach my coverage and my family's coverage, and see what more I could potentially afford. So there's different ways at it. You don't have to jump to a $3 million policy if you're not there. You can start with what's comfortable for you, but you want to work it in. And there's no one better to work it in with than a life insurance business owner that also does financial planning. So check out Mr. Mike Wilson. How do we get in touch? And I guess we're going to put some links in so that you guys can click and follow along as well. But you want to maybe mention the name of your company, number, how does someone that wants to get interested contact you?
The name of my company is called Wilson and Associates Insurance and Financial Services, Inc. The website is called betterprosperity.com. betterprosperity.com. And the office phone number is 301-306-0800.
So you heard it. Reach out. I mean, financial planning. So he'll look at your whole package and help diagnose what's best for you. But get something, right? Get started, right? Hopefully this started to change the mindset a little bit, which is the first start that has to happen. But then give them a call. As you can hear, we didn't get on here like a salesperson that's trying to sell you and dangle the life insurance in front of you. You've heard, he said he came out of, wearing shopper's shoes to now extremely well off. And it started with that mindset shift, but then also getting around people with the same mindset and also looking for mentors and coaches. So you guys have clearly heard why he's one of my mentors. I've told you that, right?
Yes.
Okay. All right,
absolutely.
Cool. So take care of your mentors too. Take them out. We gotta hit out another time soon. It's been a
we've
few
been
years.
out though. Yeah, it's been a few years.
Yeah, but take care of your mentors and get some life insurance. Thanks for watching. Do me a favor, like, subscribe, share, tap, come back.